Okay, so what Mnuchin is effectively saying, I think, is that all this tariff talk is nothing more than a negotiating tool with the goal of getting a better deal on NAFTA. Okay, so why then the talk about slapping tariffs on cars made by European automakers? But here's the question. Can we have a healthy economy with policies of lower taxes, increasing tariffs, which are taxes, increasing interest rates, and don't forget, increasing the deficit and the debt? Joining me now from Dorado, Puerto Rico, CEO of Euro-Pacific Capital, Peter Schiff. Peter, you heard the Mnuchin message there. It's pretty clear that he's a very optimistic guy. Yet at the same time, we have China and we have Europe now saying, hey, if you slap tariffs out there, we're going to slap tariffs on you. But it also should be noted from my research that some 70% of the steel is made in America. I mean, so we control effectively 70% of the market. So is this just leverage talk? Do you believe that, to get a better deal on NAFTA?
Well, first of all, I wouldn't describe the U.S. economy as healthy now. I think it was very sick when when Trump inherited it from Obama. And unfortunately, it's actually gotten sicker. But let's talk about tariffs, because first of all, tariffs are just taxes. That's just another word for taxes. And the taxes are not on steel. Steel doesn't pay the taxes. The taxes are on American consumers who want to buy products that are made out of steel. And when Mnuchin is talking about protecting American business, he's talking about protecting them from competition. But competition is what protects the consumer. So what Mnuchin is talking about is making products more expensive for Americans to buy. He's talking about diminishing the American standard of living. So this is not a positive thing. And it's not actually, it's going to backfire because our trade deficits are a disaster. Trump is right about that. But these tariffs are actually going to make it worse by making American industry less competitive. Yes, it's going to help steel because they can jack up the prices that they charge American consumers. But all sorts of products that are made with steel, now a lot of Americans are going to buy imports instead of buying domestically manufactured goods. And American exporters are going to have, a harder time selling their products that are overpriced because they had to buy steel or aluminum that was above the world price.
It's just stunning to me that we don't know our history. I mean, it's not as bad, I don't think, as what happened in 1930 with Smoot-Hawley, but we certainly know the effects of Smoot-Hawley, and it could happen again, certainly. But the recent drop in the Dow, a lot of people are blaming this drop on this tariff talk, but you have a bigger picture look at this bumpy ride over the last 3 months. You're saying, Peter, this is part of the bubble that you've been talking about off and on. There are other people, though, who say this is part of a healthy back and fill of a bull market, that you want to have these dips here to stabilize the market. What's the difference in your mind?
I don't think this is a regular bull market. I think it is a bubble. And there's a good chance that that bubble popped when we saw that 1,000 or 10% drop in the Dow in about a week. Interest rates have started to move up, and they've got a long way to go. We're still, very close to the bottom in interest rates. We're going a lot higher, but the budget deficits are exploding. I mean, according to the government, next year we're going to have a $1.2 trillion deficit, and that's assuming we don't go into recession. I think there's a good chance we're going to go into recession, and so we could have a deficit closer to $2 trillion. But these are deficits that are bigger than anything we ran under Obama, including during the Great Recession. Our trade deficits, as Trump is pointing out, are exploding. They've never been this big, and they're going to get even bigger. Government is growing. Government is bigger than ever. So we've got an out-of-control government. We've got out-of-control debt. And I think the only thing that kept the economy going was a lot of this misplaced optimism. But anybody who's actually been looking at the economic numbers, you've been seeing numbers that have been constantly disappointing what the forecasts are. So the momentum is already leaving this Trump rally or euphoric, bounce. Right. The economy is rolling over, but the problems are getting bigger. And now we're adding these tariffs into the mix. And that's just, another problem that is going to weigh down an overvalued market.
Personally, I don't believe, you're the expert, but I don't believe the trade deficit is that bad. I have a trade deficit, for example, with my local supermarket. A trade deficit was at its low during the Great Recession, which means the American public wasn't buying as much stuff. Trade deficits mean the American people are buying stuff that isn't necessarily made in this country. But when you look at the debt and the deficit, which I don't think most Americans know the difference between the debt and the deficit, but let's talk about the deficit right now. You mentioned $1.2 trillion. The interest on that right now is somewhere in the neighborhood of $230 billion a year. But as interest rates go up, and if they continue this trajectory, that number is going to double and maybe more. This is not a good scenario on the deficit alone, not to mention the overall debt.
Yes, I mean, the deficit is just the amount of debt that we add every year.
Right.
The total debt, the national debt, is the sum total of all the annual budget deficits that we've been running. And that's getting close to 21 trillion. And yes, if interest rates get back to normal, and I actually think they're going to go much higher than normal, but just getting back to normal would add, hundreds of billions of dollars, near $1 trillion a year to just the cost of paying the interest on that debt based on the current size, not even based on the size that we're going to run it up to. But there is a big difference between the trade deficit that you think you run with your grocery store and the trade deficit that America runs with the rest of the world. See, you're supposed to export products to pay for the products that you import, but we don't do that. I mean, we export some products, but not nearly enough to cover what we import. And so what we're giving the world is an IOU. We're giving the world dollars, which they use to buy U.S. treasuries. But at some point in the future, they're going to want to cash that money in. Foreigners are going to want to take those dollars and buy stuff. And that's when the problem happens, because what are they going to buy? I mean, we don't manufacture anything, so they're going to buy everything that's not nailed down. They're going to buy used cars. They're going to buy used furniture or computers, and they're going to start buying up real estate. They're going to buy up our land. They're going to buy up our companies. I mean, we're basically mortgaging the country. We're selling off our assets so that we can consume. And we're the world's biggest debtor nation. How did that happen? We used to be the world's biggest creditor nation. We became the biggest creditor nation by running trade surpluses. That's how America got rich. We sold products to the world, and we accumulated assets. Now we buy products from the world and we accumulate debt. Everybody else is collecting our IOUs, and we've gone from the richest country to the poorest country. We owe more than the rest of the world combined. This is a very tenuous situation to be in. Now, in the short run, everything feels good. Just like if you're living on a credit card and you're buying stuff that you really can't afford, you're living a standard of living that really, you don't deserve. The problem is when the bills come in, when the credit cards get declined and you can't borrow any more money.
That's right.
That is the point to which America is coming, where the world cuts us off, we get no more credit, and now we can only consume what we produce ourselves, and there's a big gap there.
I don't know if
we have hollowed out our industry. We don't have the ability to produce the things that we consume.
And I don't know if that doomsday scenario, which is staring us in the face, I don't know if it's going to happen in our lifetime, Peter, but certainly it will happen in my daughter's lifetime. You're talking $22 trillion in debt, as you mentioned. $6 trillion of it is owned by foreign countries, $1.1 trillion of that by China alone. And that is a national security disaster in the making. Peter, thank you.